Hello, everyone. Welcome into the AI Circle for this afternoon. While I'm letting YouTube catch up, I'm just going to let you guys know about the housekeeping stuff. Our next AI Circle is going to be October 1st. Tentatively, the next one after that's for the 15th, but I think we're going to push it back a week. So, as always, same time as normal, but just letting you know the next AI Circle will be October 1st, and I will also announce that at the end for anyone who joins a little bit late. But thank you guys for being here tonight. I already see a bunch of you are on, and looks like I've seen a couple things in the chat, so everything must be going well. I'm just going to get the disclaimer out of the way before we bring Kelly on, and it'll probably be a lot of the same that we've discussed in the last couple. The market hasn't done a ton except for just incrementally go up a little bit. One announcement I do have to make maybe before this, if you guys haven't been in your iFlip app in the last week or so, we did make a couple changes, and more will be coming. But if you guys have any questions on the new home screen or the performance tab, feel free to put those in the chat. I honestly haven't gotten any feedback on it, good or bad. So either everyone loves it and has no issues with it, or they haven't noticed it, or just don't know what to ask. So if you guys have questions related to that, happy to answer those tonight. And with all that being said, here is our disclaimer. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. Rob, thank you for it's funny how it came through on my end. It says hand purple blue piece. I'm sure that's emoji, but thanks for the comment, Rob. So let me get Kelly in here. There he is. Kelly, how are you?
Hello, everyone. How are you, Lee? I'm well.
Good. And just the typical agenda. We'll start with the market as always. We haven't, to my knowledge, really been making many trades. So we almost need to remove that little part of the agenda because there's just been not a whole lot to report back.
There is a reason for that.
Yep. That's not necessarily a bad thing.
It's
And as I said at the start, any Q&A, and obviously feel free to ask, Kelly, any other questions. But one topic I wanted to go over was the new screens, if anyone had questions. And if not, then we don't even need to discuss it. So, Kelly, I don't know if you have anything to start with or if you want to just get your screen going, but feel free to take it away.
all right. Well, I think the screen is there for everyone. Hopefully, they can
Yep.
see it. Oh, gosh, everyone. Well, I really wish I could say something that isn't a broken record. Today, of course, I think the one event of the day outside of the fanfare for Donald Trump in the UK is that the Federal Reserve finally cut interest rates 25 basis points. There was only one dissenter, a little known Fed governor, Myron Slavic, I think it was. And by the way, I didn't even know who that was. But the people that matter, which of course is the Chairman Powell and maybe the gunned after Lisa Cook, they all voted to lower interest rates. So the lowering of interest rates caused a little bit of a shuffle in the market when it occurred. I'm going to open up and go to a daily chart of the 10-year note as it traded today on, say, a 5-minute chart. Hey, I guess this must have been the time that the Fed cut the interest rates. And notice what happened. These are the 10-year Treasury note futures. So when they cut interest rates, the futures price went up, which means the yield went down. And for the first 10 minutes, and then after 10 minutes, the market went right back down and made actually a new low. And just kind of continued where it went for the day, which is very little. So today, the 10-year note came in at about 4.03. I think it went out at about 4.06. No real change in interest rates on the long end of the curve. However, what this will mean is that anybody in money market accounts, like our money market accounts, we do expect that those things will lose about 25 basis points per year going forward. So right around now, a money market yields about just under 4%. I call it 4%. Now will be down to 3.75, give or take 5 basis points. So that is a significant move. Yet this was a perfect idea or a confirmation of the old adage that you buy the news and sell the fact. The market is known for many weeks that there was going to be a federal interest rate cut. And it occurred. And what happened? Well, the Dow was up 260. We can see that. That's a 5-minute chart. Let's go to a daily. Back to a daily chart. I use this charting package because it's easy for me, and I have everything in it. So here's the Dow Jones. They made another new high for the markets. You can see it just made a new high. These are the highs of all time. And the S&P 500 actually lost a little tiny bit today. But as you can see, everyone, it is literally on its high. The same is true of the NASDAQ. It was down much more earlier, but it came back towards the end of the day. If you can see closely how the bar was down, but then it kind of rallied back. And we were also very similar to the S&P right off our highs. So what is this? This is more of the market melting up. We're starting to see it in a lot of our performance. I was actually glancing through, and I'm seeing, the big tech performance this year is about 14.4. A lot of that's due to the fact that we're out of NVIDIA and we're looking to buy NVIDIA. I can tell from my knowledge that price would have to be about $10 to $15 lower to get into NVIDIA. On the other hand, we are long the remainder of these stocks. And as you can tell, most of them are very close to their highs or just off it. I mean, Netflix had a good day today. They came off their highs, but they're rallying up from just kind of a crazy beginning of the year when we had the tariffs. So early in the year, we had the rally, but then the tariffs hurt the market. And it's just kind of crawled its way back up with very steady performance on the big tech Smartfolio. I also want to show everyone the one that's really performing this particular quarter is the 4QR. The 4QR, not a lot of people know about it. It's extremely aggressive. You'll see it if you look at these quarterly returns. If you just look at the returns in general, I mean, you are going to have rock and roll quarters down 10% here. But we've had subsequent rallies, of very large rallies of approximately 20% over the last 2 quarters, each quarter. So this being said, this is an extremely volatile Smartfolio. And just know that you get what you get here. If the market moves into a downwards market, this will also has the opportunity to lose very similarly to what it makes. So just keep that in the back of your mind. However, right now it has been quietly a great performer. Some of the other things that, and again, when we look at flip Smartfolios, we're looking at things really kind of in aggregate. So most things, as everybody knows, the market's up about 15 to 16% on the S&P. That is our benchmark. Our goal is to try to beat that. And so you have to have a lot of portfolios to do it. Here's our actual S&P return for the year. And there we are, 16.8. So we're on par, right with the S&P 500 this year, which is good, which is why, because we're in the market, we're long. We've been long the S&P pretty much all year. The other thing that I think is kind of interesting as I go through flip portfolios, let's look at red oil. Red oil has been a pretty well used Smartfolio by flip investors for quite some time. What's going on in the oil markets? Well, we got clobbered during the trade wars, which came in the beginning of the second quarter when the tariffs came out. Yes, the markets have recovered a little bit since then, but this portfolio for people, and by the way, this is a theoretical performance. It isn't owned here. But in other words, it's just looking at the movement of the prices of the 4 components that we have in there. And I think you all know what these are. Most of these stocks are up on the year, but just on margin. Why? Oil, of course, the goal of the current administration is to get oil prices lower. So, but yet somehow they maintain their current prices, even though the revenues must be going lower as a result of this governmental push to fight inflation by drilling, baby, drilling. And so the way I look at it, the only way I can look at it is oil has been something that's a hallmark for dividends for generations of Americans. For the last 50 years, people that have been in this sector have done well. Why? Because it's revenue that's consistent, and they pay dividends. All these stocks or ETFs do. And so if we were to look at the individual, like this is the XLE, which is the an ETF of the energy market. If I were to look at it over the last let's take a look at the last year. Notice the prices really haven't moved. And if we look at it from the beginning of the year, where is that? Right around here, I guess, January 2nd. Notice we're barely up on the year. We're here, then right around that line, and then we're a little above the line. So the market, the stock itself, the ETF itself hasn't moved. However, it does throw off a dividend of like 2.9%. So at the end of the year, if it's still the same price, we got 2.9% will be what we would have earned, plus or minus any stock increase or decrease. So again, for things that are paying income, for people that are older and they're just looking for their brokerage accounts to bring them money so that they have income, red oil is still a good choice. And this is when it's under pressure. So we should think about that. The other one I think, of course, is, a money market. Let's look at that, everyone, so you can see this crazy graph. So I want everybody to be aware, here's something you can learn on the AI circle, that money markets are not about price changes in the underlying things it owns. In this case, it owns 2 cash management ETFs, the NEAR and the USFR. And they own them just in this percentage, 70 and 30. And the reason we do that is because this tweaks the money market rate a little bit, because the USFR includes a lot of treasury debt, but it does include some other kinds of debt as well that offers a little bit higher yield than a US Treasury, but they're all AAA offered commercial paper and things like this. So this particular thing yields about 4%. So we don't really care, and we will ultimately change this design for the money market product because, again, it's not about the price change, it's about the yield. So it's just the way our software looks. I think we should just note that the graph means nothing on the money market. It's just about the yield. The other thing that I think is interesting to know is how some of our other portfolios are doing. And so one of the things that we will get, and I don't have it here, is a high yield portfolio that should be coming out soon. And that will be another button that looks like a red button or a black button down here. It'll be low risk, so that means it'll have this color, this cyan color, means low risk. Conservative means the way they color coded it. And the high risk are the bright orange, like this, aggressive. When we see that, that is something that I'll talk greater to once it is posted out there. But the idea of that is it's a covered call. I think I mentioned it on the last AI Circle, a covered call ETF where it'll consist of 5 different kinds of covered calls. And we're hoping that I've done a test and I feel that the yield could be somewhere in the neighborhood of about 12 to 15% a year, with dividends plus minus price appreciation, which, by the way, I would expect some negative price appreciation on these kind of products, which is fine, as long, of course, as the yields and the dividends overcome the losses in value. So that's something to be on the lookout for. Now we'll get back to the markets themselves as I just continue to yaddle on. So let's take a look at the dollar. I think it's always important to keep your eye on the US dollar. Take a look, folks. This is the dollar index. The dollar is definitely weakening. From the highs, literally at the end of 2025, it was at 109, and we are down over 10%. So when we travel to Europe next time, folks, just remember to bring more money, because we will have to pay more. We will have to use more of our dollars to buy euros and quid as we travel over to the UK and mainland Europe. It will cost more. The other thing I think is interesting is, we saw that big tech was up, but let's take a look at individuals, zoom in. I mean, Apple's had a very good run over the since August. It's up from literally 200 to 240 almost. 240. I mean, it's not rocket science to recognize that that's a 20% increase literally since the beginning of August. Amazon, again, right near its highs. Google, new highs. As you can see, this one just shot up. We're long. Meta tried to come, again, it just doesn't retreat from its highs. It's so hard not to like this stock, even if you don't like ownership. You gotta like the trend of its stock price. The ownership of this company, like them or not, I can tell you, is definitely invested in building a new kind of model for the way we live. And so I expect further highs in Meta over time. But I might want to add too that when we came into the year, I was actually not so sanguine about high-tech stocks. And I felt that high-tech stocks could struggle because of the tariffs that we knew were coming. But again, even if I was right about the fear of tariffs, which we see here is the prices declined, into literally early April, finally rebounding in mid-April. The thing that's happened is the tariffs, the way they were used, really never took full place. They were used and then literally as a weapon against our trade partners, in the sense that many of those tariffs were delayed. And then because of the delays, it calmed the markets, causing this huge rebound that we saw literally after Donald Trump came out with his infamous easel chart, where he was saying what the rates were going to be on every country. That's when the market did this. It went down the toilet, literally, from the beginning, the first day of April, like April Fools, literally to like April 4th, with that final big 10% day that we had back up in the market, and then followed up ultimately by new highs. So again, the tariffs did not have the expected effect of inflation, albeit inflation is down marginally, but it still remains high. But the other thing that is more worrisome to the Fed, at least, is the labor, and that there is still unemployment that must be addressed. We've already gone over the oil section, so we don't need to go through that. These are just other market variables, like this is the Russell. I mean, things are generally all on their highs. So there's not really much to talk about here. But I will also mention that the banking stocks, most of the banking stocks are right literally on their highs, like JP Morgan, or literally new high for Bank of America. Goldman, new high. Charles Schwab, just off of its highs. These are stocks that some of us might own. Fannie Mae. I mean, these are things that really increased. Notice they increased right at the election from $2 to $14. Take a look at this is the Fannie Mae J, I think. Yep. This is one went from like $4 to $15. So what has happened here? These are the government-owned entities, GOEs, and operated entities. And these are things that might privatize. And that's one of the reasons why they're going up. And they'll privatize with a subsidy from the government itself. So that's one of the reasons these things are going much higher. Then we go into kind of the things that represent most of our portfolios. So again, one of them is still Carnival Cruise Lines. I mean, making kind of a new high. I can go back to COVID before we ever had prices here. So I don't know if these prices are going to go back to, the $60 and $70 a share. It all depends on the economy. I think we want to stay long Carnival Cruise Lines if we have it, because I don't see on the horizon anything that's going to really dent the economy. Our biggest fear is low growth. And especially under this administration, which is really striving for very high and quick growth. We might as well, here's a new stock I'm kind of looking at. It'll be incorporated somewhere. This company here is a services company for financial services company. I kind of became interested in it in this area. It's not part of a Smartfolio yet. I'm looking at it to make new highs going forward. And therefore, when I see things like this, these are things that I will aim training of our models on going forward, so that we can see how we can incorporate them and manage them in a Smartfolio. Tesla, might as well take a quick look. If for those of you that got a thrill out of seeing Tesla cars burn, any of those people have been burned, because the market has decided once Elon left government, look what happened to his stock. It's going back and looks like it's going to threaten an old high. So if you're Tim Walz hoping for a bad day in Tesla, time to keep your mouth shut and recognize what the company is and who the man running it is, and who is, in my opinion, 20 times the man that the governor of Minnesota is. Going to Bitcoin, we should talk about that. Where are we? We're just off of old highs. So we had this little spike high here when we got over 120,000 in Bitcoin. We fell off of that, but it doesn't matter. This is something that most of us would agree. It's hard not to own some form of Bitcoin. And it looks to me like we're still on a trend to make new highs. So we do own it halfway, but we don't have a double position in the BitFlipism now. It's a stock I keep an eye on. It's something notable. It's a very cheap stock, given to me by a dear friend as an idea. I'm watching it. It seems to be moving higher, which is a pleasant thing. A lot of people like stocks of low price that look like they're going to explode. So remember, it doesn't make any difference. It's a matter of percentage gain. So just keep that in the back of your mind. But this is Hawaiian Electric. Hawaiian Electric's obviously a utility company in Hawaii. Had problems in the past, has worked them out, came out of, I believe, receivership, and finally made a profit, I understand, in the last quarter. Other companies to kind of keep an eye on, again, here's Costco. Its highs were around close to $1,100, $10.80 it looks like. We're just off by $100, about 8% off the highs. Costco's always been a good bet over the years. UPS, great dividend stock, but it is struggling. It just doesn't seem to like itself. So this is the furthest thing from, it just doesn't want to look itself in the mirror. It's afraid of itself. It offers a great dividend, but it sure just doesn't feel like it wants to bid higher. What else do we have? I think we can kind of, Lee, I think we can kind of call it there. I think we've gone through the markets, and if people have some questions, this might be a good spot for that.
Yeah. Where do we even start? Let's
maybe did. Let me look.
Move this to Q&A. So first question has to do with AI and pulling us, into cash if it sees, some sort of correction. I'm sure you can read the question here. I don't know if you have any comments or what you would want to say to this.
Reliable. I'm going to cash algo based on trend. How reliable, confident is iFlip going to cash algo.
Essentially, how confident are you that if a correction is coming, that the system's going to pull us into cash? Or his second question was, or should I kind of do it myself?
Let's see. Is that the second question?
The second piece of it, should I do it myself, anticipating a crash?
My answer is, first of all, where is that crash going to come from? I don't see it. So when you anticipate a crash, the things that cause it are things like tariffs cause it, or possibly higher interest rates cause that, right? We're trying to fight inflation in the economy. So you expect higher interest rates. Well, if that's the case, I'm going to sell stocks and I'm going to look to be buying bonds at some point, right? So if I expect higher interest rates, what happens to the bonds? The prices go down, but your yields go up. So I don't see where a crash comes from here. We already know that we have a Federal Reserve policy that is trying to lower interest rates. They just lowered them today. There's at least 2 more expected. Going into a falling interest rate environment, it's hard to figure out where a crash could come from. The only other thing that a crash could come from is if all of a sudden we have some energy crisis where we don't have enough oil. Well, that's not a problem right now. Our own domestic oil production's at all-time highs. So there's no crash coming there. A war changes things definitely quickly and dramatically when we first sense it coming or we see an event. But right now, the only event that looks like war in my mind is some kind of problem in Eastern Europe as a result of Russia, for example, flying drones that now go over Poland, etc. But I don't think that is going to persist. So the idea of a crash is something I've spent a lifetime being afraid of, but that is why markets crawl higher. They crawl the wall of fear. And when people fear that, that's why the markets melt up. The people that express themselves by getting out of the market because they're afraid of the crash are generally the people that don't participate enough on the upside, thinking that they're going to time the market on the way up. So I don't see where that comes from. And in terms of Flip's ability to do it, earlier this year, we were also out of the S&P prior to the April move lower, and even prior to that. In COVID, we were out. 2018 Christmas, we were out. 2022, we were out for the first 9 months of the year. So what do I believe the probability is that Flip will be able to sidestep the next crash? I'd say, given the times I've been around this since 2018, we're kind of batting 1,000. And so I'm going to bet that we will sidestep it. And that is the whole point of our software and platform. It's the idea is that if you want to put your thoughts into it yourself, then you really shouldn't own a Smartfolio. You should just do it yourself. But if you believe of what we're doing and that we use science to try to find these things, anticipate these problems, and step aside, then you're at the right place. And therefore, you should put the best advice I can offer is to say, if you believe in the science and that's why you're here, then you buy the products that are offered on our platform, and they will manage that fear that we all have.
Yep. I'll just add to this one. He also asked if he pulled it out himself and put it into cash, will the AI pick it up and invest it back? So the short answer is no. Whenever essentially it'd be like your deposit coming into your iFlip account. So anything that's in buying power never has the ability to get invested.
Right. And it's very important to know this is a self-directed platform. That's one of the reasons we have that disclaimer up there before we ever do this. We're not giving advice. People can choose for themselves, what is conservative, balanced, and aggressive. At some level, we all know aggressive means more risk and conservative means less risk. That's exactly right. However, in our case, even our aggressive has mathematical characteristics that make it feel more like it's balanced or even conservative, because we are trying to move to cash when the market is moving lower. And so because of that, if you have cash, you have generally, whenever you have cash, you have no risk. But Lee answered the question properly. No, if you move your money into the money market, that is a decision you made. You self-directed it to remain in cash. You must therefore, to get it back into the market, you got to self-direct it back by clicking one of the buttons that buy stocks.
Yep. One last quick one. Same person, Zung. We haven't owned NVIDIA. I know Kelly said that, or before we got on, Kelly and I were chatting about it. He said we got really close to getting in today, right, in NVIDIA, but you're thinking it's going to be a little bit lower.
Not today. Just last week we came within about $3, and then it rallies back. Now it's on its way back down. So where NVIDIA is let's see if I can look. I felt it was
170-ish.
Yeah, it's at 170-ish, and I'm thinking 155 is an area where I think it would purchase. That's where my guess would be on a purchase based on what I know about our algorithms and machine learning.
But you are correct. That is the only one in big tech that we don't own.
Correct.
So that all looks correct.
We will. I hope it's right when we buy it, by the way. It's
Kelly, sorry, I was going to say I'm going to put your screen back up. Can you go back to your BitFlip Smartfolio that you had up there? Sure. John had a question about, was there a recent entry into BitFlip?
Yes.
If you go to activity?
Yeah, someone pointed it out in the chat. Yes, we recently did get another buy signal, because notice they're both long. And that buy signal must have came within a few days ago, to my knowledge.
I think at the bottom where it has the history section, I believe it said the 15th. So
let's see. Let's go to the history right there. Oh, 2 days ago.
Yep. Okay, cool. I got BitFlip, or excuse me, iBit before we had the Smartfolio, so I own it slightly differently than everyone else does. So I wish I had it to be able to track it with you guys. Let's see, anything else? Steven, sorry, just getting to your question. I'll take a look at yours. My calendar link's also up a little bit higher in the chat if you want to schedule some time for us to sit down and go over your particular account. Here's a different one. From Susan. Why hasn't gas prices gone down, at least in Utah? Don't know about other states. Well, I don't know what you've seen in Arizona.
I can tell you what I've seen in Arizona. I saw the prices go up.
Yeah.
We were paying about $3.09 a gallon for regular. Now we're at $3.79. So, and by the way, because I'm in the business I'm in, it's always bothersome to me. If you guys could see my screen again.
Oh, go ahead.
Can you put that up?
Yep.
This is this is oil, the price per barrel. I mean, to me, we look like we're kind of near, these were the lows, a few months back. But it seems like when they go down, as we all know, the prices at the pump at the gas stations they stay high no matter what this price is. Then when the price of gas is very sticky. But oil has been here now for about 2.5, almost 3 months, sitting here below 70, and somehow our gas at the pump in Arizona has gone up to the highest price I've seen all year. So I don't know why on earth. The only thing I can ever say is this: every municipality, when they need money, and remember there is a wage price inflation going on. Most people need more money. Truck drivers need more money. Clerks need more money. Mechanics need more money. And those are people that work for municipalities. What is the one way a municipality can make money? They can tax energy pretty much at will. And that's what I think is happening. I also noticed this in Tucson, Arizona, the price, which is only 100 miles away, the price is almost 70 cents lower than it is here in Phoenix. So that tells me it's tax. I don't know about Utah, but my guess would be it's taxes.
Yeah, I'm not even going to get into this conversation being in California.
Yeah, no, you
I
don't.
don't feel
Not
sorry for you
allowed.
guys at $3 and whatever.
Yeah, I guess not.
um, I don't see much else. Kelly, if you have a minute, I was just going to screen share and just briefly show the 2 new screens for people, if that's all right with you, unless you
Of
have
course it
anything
is.
else you wanted to go over. Forgive me. Just let me know when you're seeing my home dashboard. It should be up now.
We see it.
Cool. Okay, so really the 2 screens that we first updated are these top 2, so home and performance. It's a lot of the same information, but we've, I would say, simplified it. I think we've always done a pretty good job of keeping things simple, but I can also understand when people get confused as well. So, nonetheless, this home screen, the chart's going to look a little bit different. I really like the look and feel of this. But nonetheless, buying power, back to a question we had earlier, like I have 0 in this account, which in my case is good. Your deposits are going to go in here for anyone who's maybe newer to us. And this is the money that you can take and invest into Smartfolios. So you guys are probably used to this orange invest button up here. You can also access the same thing just by clicking invest on this home screen. Then if you need to do anything funding wise, you can actually do this here. So you can do a little bit more from the home screen than you used to be able to. The performance table that used to be down here in the home screen is actually now in this performance section. And this is a totally new look and feel as well. So this is at the top, these headers here are just going to show you your contributions or how much you've put into the account. It'll also tell you the growth of the account as well. Similarly, you can look at each individual Smartfolio that you own. So if I wanted to look at aggressive and say, how's it done the last 3 months? There you go. You could look at Ranger, Red Oil, etc. And then that performance table is down at the bottom here. So it should be, it's all the same information, I would say. It just is in slightly different places. So I just wanted to briefly show this in case people hadn't seen it before. And if you had any questions, happy to answer them with a couple minutes to spare here.
Okay.
I know. Let's see. While we're on waiting for maybe any potential questions coming in, one question here was, Kelly, what's your take on some of the AI stocks? That's a very general question. Does it depend on the AI company or the AI stock?
Oh wow. The question is so broad. It. I mean, I'm kind of looking at AI a little bit different. Who asked the question?
It doesn't have a name. It just it says LGBT Wellness Summit and Retreats. I'm sorry, I don't have your name on here.
Let me answer it maybe a different way. AI has been a buzzword probably now for the last 2 years, and the stocks most obviously associated with it, the main stock most obviously associated with it is in NVIDIA, which of course has gone up astronomically over the last couple of years. Because the space is still growing, we are starting to see the use of AI starting to come into the marketplace, in the sense that you feel it. Mostly, I feel it when you call up an institution, you're looking for some information, and you run into a computer. Well, some of those computers are no longer voice prompts. It is AI on the other side listening to what we have to say and trying to direct us to an answer. And at the very last resort, get us to a human. And that is, for me, it's the most frustrating thing in the world when I look for customer support and I get AI. I don't want AI when I call a bank or, an institution. I want a human being. That being said, I'm kind of looking at AI in terms of picks and shovels. And you've probably heard this metaphor, right? Don't mine for the gold, sell the picks and shovels. And that's what I'm doing. If you look at like our Vector Plus portfolio and things like that, or in some of our other portfolios as well, you'll see a lot of things that are AI driven, but they are not AI themselves. So it's not the software or the hardware anymore. To me, it's about, okay, I've accepted that AI is going to be here. It is going to grow. Um, I'm I'm not going to pick the companies like a Google that just made new highs or NVIDIA that has done nothing but I'm going to pick the places now that you have all that AI, you've got to build the data centers that require for those software programs to run. And so the data centers to me are like the picks and shovels. So I'm looking at companies that where you build the data centers that have access to electricity or water, or the companies that bring the electricity or the water or the design for data centers. So that's the picks and shovels. If AI continues to prosper, well, they'll sell more picks and shovels. And so at the end of the day, I look at it that way. So where do I see the space? I see the space becoming more part of our daily lives. Where do I see the companies that use it higher? What's the safest bet to go in that direction? It is still going to be the Mag 7 is it, which is the big tech portfolio, and the Vector Plus for us, which is holding on to a lot of the stocks that AI is based on. So with trying to kind of manage it that way, which should be a lot more steady than just AI itself. So that's kind of my thinking on it.
Would it be fair at all to compare it to crypto, where you have the quote unquote proven cryptocurrencies, and then there are a lot of the altcoins that people speculate on and try to make thousands of %? Like, I feel like everyone, I mean, we've seen it just in marketing in our space of everyone saying that they use AI when in reality they don't. I can imagine every company is going to try to get some sort of AI into their business and hope things go amazingly.
Well, again, the words in those two letters are overused constantly, and so you don't know what to believe. They say they have AI. Most of us believe it because we know it's there every day, right? We see it, but we pick up our cell phones and we ask Siri, if it's the case of Apple, what's going on? That's AI. You ask I can't say it, Amazon. If you have those products, you ask it a question, it's going to give you an AI derived answer. My thinking is, though, we are, 100 years ago, we were in unique times as well, right? Auto companies emerging, electric companies emerging, General Electric, General Motors. Those were the dawn of the true part of a real industrial age in America. It was 100 years ago. Now, 100 years later, today, it's the dawn of AI. And what that means for society going forward, my gosh, I mean, who knows? But I can say that it's unstoppable. And the companies that do it, generally large tech companies, are the ones we want to be in if we believe that that's going to be, integral to our future. And frankly, I do. I'm just taking a blended approach of buying not just the AI companies when you buy big tech, but buy all the picks and shovel companies underneath it in things like Vector.
Awesome. I'll give it a last call for questions right now. I see one, maybe two more. This is one we've covered before. I'll just answer it. So William was asking, does the iFlip account allow for dividends and gains to be reinvested instead of depositing into my external account? If so, provide directions. So the dividends will never get sent out to your bank. At the very, let's say this in short, if it's in a Smartfolio, those dividends are going to stay in the Smartfolio. It'll just be in cash in that Smartfolio that can be reinvested at a later date. If you own a stock manually, then yes, you're going to get the dividend and it will show up in your buying power, but it will never get sent to your bank if you get a dividend, automatically or anything like that. Another one from Miguel. How is the account managed differently if it's for a solo K or a self-directed IRA? It's a good question. I haven't actually gotten asked this before. I'll let you answer after me, and I'll make a fool of myself. But I mean, how I would think of it is like I'm not going to disregard your 2 account type questions there, but in my opinion, the AI doesn't care if it's a brokerage account, an IRA, a corporate account, trust, you name it. So really, I don't think it cares if there's $500 or 500,000 in there, or whether it's IRA money or not. It all is just trying to kind of make the best mathematical decision every single day. I don't know what you would say to that, Kelly.
I think you're correct. There's one difference, however, between a 401k and a self-directed IRA.
Sure.
401ks are offered by generally the CEO of a company. So companies, and there will be mandates to this again next year, where the owners of companies must build a 401k plan. There's 17 states, I've been told, must do that. When 401ks are set up, and there is a template for an owner of a company like even Flip to create a 401k for all of its employees. You can have 20 employees, you can have 50 employees, you can have 1,000 or 1 employee. The main thing is, though, it is the job of the person that establishes it, in other words, normally the CEO, owner of the company, to decide how they want to invest it. So generally 401ks, if people have them, and I've had them in my life, what happens is the 401k is they give the people in the company maybe 1 or 2, maybe 3 choices. If you're in a large company, maybe more choices to say, how do you want your 401k invested? But it's the owner of the company that decides what things are going to be made available for its employees. So how is it different? It's not. They're identical things. They're both tax-free. They're both custodian-based. The only difference is that generally a 401k, you will have fewer options of investment than you do than you would have if you were just to go and direct your own self-directed IRA. So in other words, self-directed IRA, you can buy whatever you want.
Yeah.
But with a 401k, you may only be allowed, say you are on our platform, you might be allowed the aggressive, the balanced, or the conservative, and that's it. And you must choose between one of them. But in terms of how they're managed at iFlip, they're going to be managed the same way as if it's an IRA, self-directed IRA, or just a regular individual account. You're going to be managed exactly the same.
Yep. Obviously, you can put a little bit more into a 401k than an IRA as well. There's a few differences and some other things there, but I haven't seen any other questions come through, so I think we're going to call it there. That was about 45 or so minutes. So again, as I said at the start, the next AI Circle is going to be in 2 weeks, so October 1st, same time as normal. I'll report then when the following one will be, but it should be a couple weeks after that, which would put us right around what would that be, the 22nd or something like that, I believe. So with that being said, Kelly, thanks for all the insights today. Thanks for the questions, everyone, and have a great rest of your night, and we will see you back here in a couple weeks.
All the best, everyone.